Hey y'all, Garrett with the Lawton Town Crier. And instead of the Sunday evening crier tonight, we're bringing you our third and final installment of Be Our Guest with Kimberly Furrh as tax season approaches. In this episode, we talk about refunds, why a big refund can be an interest-free loan to the government, some Oklahoma-specific tax quirks, and what to know about savings bonds, gift tax basics, and how to keep records so you're not panicking if you ever get into that dreaded letter in the mail. So let's jump in.
Right? And another unique thing is, it's awful, but gambling losses are not necessarily deductible in the state of Oklahoma on your Oklahoma return, only on your federal. So those are really the main areas of uniqueness of Oklahoma taxes.
Okay. Now let's say, for example, the people watching this, they're like, I get a return every year, and does that mean I'm doing well? Or did I give my government a tax interest-free loan for the last 12 months?
You totally gave them an interest-free loan for the last 12 months. So I have some clients that all they care about is refund or owe, right? They don't care really how it all works out. How big's my refund? So the biggest refund I've ever...
Sounds like my wife.
I know, right? The biggest refund I've given to a client with a W-2 only, not a self-employed guy, was an $8,000 refund. Well, you just loaned your money. If you do the math, that's about $700 a month free loan to the government. So I told this person, I said, let's change your withholdings on your paycheck. Fill out that weird W-4. The new ones are awful. They're awful. Let's fill it out, have less taxes taken out. Your take-home pay will go up, and then you won't be, loaning the government some money. He was so mad. He wanted that big refund. I said, why? Well, he took his family vacation every year.
For savings.
For savings.
Okay.
And that's okay. If that's what you want to do, it's your money.
Now, the government does give us some ways to get that money back that are not intuitive. You can do things like have it direct deposited. I think the state of Oklahoma gives a prepaid credit card. I hate those.
They're awful. So state of Oklahoma actually, yes, refunds. So we're going to talk Oklahoma first. We're going back to IRS. Let's talk to Oklahoma. Oklahoma just passed where they'll give you paper checks again.
Oh, good.
Hallelujah on that. So for the longest time, Oklahoma said direct deposit or prepaid debit card. Stupid. Well, this year is the first year that your tax professional can select paper check. Doesn't mean they follow our request, but it is there now. Now, let's go back to the IRS refunds. So IRS refunds can do all kinds of things. You can have it direct deposited. You can have a paper check. You can divert it into this new thing called a Trump account. Have you heard about the Trump account?
Vaguely. I don't know much about it. Well, we talk about that.
Yeah, let's talk about Trump account. So, in the new big beautiful bill that passed, one of the things was Trump wanted young people to get a boost in life. If a child is born in 2025, 26, and 27, I believe, I think it's only 3 years, could be 4, that there's this really rich couple is going to give every child born in the United States an automatic $1,000 into this Trump account, okay? But they can't touch it till they're 18. You, as a taxpayer, can start a Trump account for your child, where a portion of your refund can go into this account. It's like a retirement account. You can't get into it without penalties, but it grows tax-free. When the child's 18, they can use it to start a business, buy a house, go to college, and it just grows until they take it out. If they take it out for one of the things that's not approved for, starting a business, going to college, buying a house, then there's penalties, right? Penalties on it. But it's a pretty neat way to take, $500 of your refund into this account for your kid to have him to be able to start a business when he's older.
Now, a lot of our viewers may not have kids. Could they do a direct deposit and say they're a retirement account like an IRA or Roth IRA?
Absolutely, yeah. Thank you for reminding me of that. You can totally, if you don't have children and you don't want your whole refund, you can have a portion of your refund go to your retirement account. You just need to get that information to your tax preparer. But you can also have that refund pass forward to the next year to go for next year's taxes if you think you're going to owe more next year.
Okay. Now let's talk real quick about one other thing, because savings bonds.
Oh, yeah.
People have boxes of those that are just sitting there. The government, for the most part, does not do paper savings bonds anymore. And
Correct.
last time I checked, a lot of the paper bonds are starting to hit end of life.
Yep.
What should somebody start thinking about doing that? Because I know that there's tax implications on that right there. So tell us a little bit about that, because at one point in time, the U.S. government through the military really encouraged people to take about $50, $100 and just auto buy savings bonds.
Yeah, and actually I did that too. So back when I was married to my first husband, we were Army, and we literally took $10 a paycheck and stuck it in this fund, and then we'd get a savings bond in the mail a couple of days, a couple of months later. Savings bonds, cashing those in cannot be done in person. It's done online, right? But you really need to be careful. You don't want to take that big box out of the closet and go in and redeem it all the time, all at once, because it could charge you into another tax bracket, because that interest is taxable, right? The initial investment's not, but the interest that it grew over the years is. And I've seen people go cash savings bonds and kick them into another tax bracket. I know, I agree. But here's more to the story. You want to make sure you cash those savings bond in before the bondholder passes away. Because once they pass away, it's really, really difficult to cash those in unless there's a beneficiary on there. So if you've got an elderly parent or a grandparent that has savings bonds, you need to cash them in before they pass away. Otherwise, you may have to go to probate over it.
Okay.
Yeah.
Now let's talk about, kind of some financial planning. Let's say, for example, I giving money to my son. I mean, school teacher, it's going to be $10, $15, but what is the maximum contribution limit before I have to start worrying about filing paperwork to give to a family member?
So you're talking about gift tax. So what a gift tax is, first let's define that. Gift tax is a special tax return that you have to file when you give away your wealth, right? So people that want to give gifts to their children, there's a limit on how much you can give each year. And right now it's $19,000. You can give more than that. You just have to tell the government that you did. Now, it's not taxable to the person that received it, but it's not deductible to the person that gave it. But you still have to tell the government that you gave away this money, and it actually protects you. So you as the receiver, you want to have that gift tax return filed, because if you get audited, IRS knows where you got the money from, right? As a person who gives it away, you want to file that gift tax return, because when you die, your estate needs to have that information. So $19,000.
Okay. Now, let's say, my wife and I, is that $19,000 for me and $19,000 for her? Or is it $19,000 since we're one little unit giving to our son?
$19,000 each.
Okay.
So you could give your son $19,000, and she can give your son $19,000. And I know your son's too young, but if he was married, you could give $19,000 to his wife, and your wife could give $19,000 to her.
Okay.
So you could really pass out some wealth, if you have it, to other people. And it doesn't have to be family. It can be a stranger. I don't recommend it. But if you've got a neighbor that really helps you out, or you really want to give to somebody who's down and out, again, be very smart on your choices, but you can give your money away to a stranger.
So that rich Nigerian uncle who keeps emailing me, make sure I get the tax information so that the government knows where he got that. Gotcha.
I think he's my uncle too. So. I invited him at Christmas. Did you?
I got lots of emails, but I put them on ignore. Now let's kind of move. We're wrapping this up here pretty quick. It seems like people want to wait. They wait a long time to get their tax returns back.
Yeah.
And they get antsy.
Yes.
Do you see that happening again this year?
Oh, this year's the worst. Okay. So with this new big, beautiful bill passing in July, right? IRS had a certain time frame of when to analyze the bill and get things implemented. Well, guess when that time frame was? Right at that government shutdown. Mm-hmm. So then that 45 days the government shut down, nobody worked on this, okay? So then IRS is behind the curve. Right now, I don't even have all my tax forms to be able to do tax returns. So with that being said, people's refunds are being delayed, right? People that are on Facebook or Instagram saying, I got my refund, they're liars. they got that refund loan because refunds are not being issued just yet because IRS is behind. So if you do want to check the status of your refund, then you want to go to IRS's website or Oklahoma Tax Commission's website. And there's a spot on the website that says, where's my refund? And IRS actually even has an app that you can download to your phone of where's my refund. And you go check your status. But really, you should wait 3 to 4 weeks after it's transmitted. Now, let's talk a little bit more. Just because you signed your tax return on February 6th doesn't mean that your tax preparer transmitted it the same day. You need to get confirmation from your tax preparer of when it was accepted by IRS and accepted by a tax commission. That's the date you use, the acceptance date. That's 3 to 4 weeks from the acceptance dates.
Okay.
Yeah.
Now, let's talk about keeping paperwork. As a SPED teacher, I always advise that my SPED students, parents keep that paperwork for a number of years.
Yep.
And this isn't about SPED, but the government's the same way. If I pay taxes, I need to keep that paperwork for a certain amount of time, but do I need to hold on to it forever till the day I die and let my son and his children go through and look at tax returns from 2006 when you started doing my taxes?
Well, other than it's just really cool to look at old records, no, you don't need to keep it, right? So if you were to get audited, IRS says I can go back and look 3 years after the year of audit. So let's just kind of think of this. Short answer, 7 years. But let's really think about this. If you were to do a 2025 tax return right now, what year you're doing it in?
2026.
2026. But IRS is not going to go audit 2025 in 2026. They're probably going to pick it in 27 or 28. So now it's 2027. They're picking your tax return for audit of a 25 tax return, right? So this is already 2 years old data that you got to go find. But if they find that you are doing something sneaky on your 25, they can go back 3 years. Look at your 24, your 23, and your 22. Well, now they're looking at 22 data in the year 2028 because if they're going to have to spread it out to more years, it's going to take a while. So now you're 6 years away from when you spent that dollar it's being looked at. So that's why we tell everybody 7 years.
Now, having a tax professional such as you, do you maintain records like that as well?
Kind of. I maintain what you give me. Some clients just give me a summary. They don't actually give me the hard receipt, right? The Lowe's receipt or whatever, Walmart receipt or Staples or Amazon. They don't always give me those. They give me totals. You have the burden of proof, you as my client, to keep that Amazon, that Home Depot, that Walmart receipt, because you just gave me a total. But yeah, I keep my stuff for 10 years. And most accounting professionals should keep it for 10 years.
Okay. Now, just real quick, is there anything that we didn't cover that you think is important that people should know about taxes or anything like that?
I go back to tax professional, picking the right tax professional, and I just kind of want to expand on that a little bit. There's all kinds of people that do taxes. Are they credentialed, right? It's kind of like, do you trust a nurse to put in an IV that doesn't have the letters after her name? So in taxes, there's tax preparers. They're just preparers. Anybody can sign a tax return for somebody else. If you want somebody who's certified, an enrolled agent, an enrolled agent has taken a test with the IRS and they have proven they know the tax law and they get letters after their name, EA. Then you go to a certified public accountant, CPA. We not only have a 4-year degree, but we've taken a 16-hour test and we have to do continuing education every year of about 40 to 60 hours of continuing education. So we are even better, more trained, not better, some of us aren't, but we're more trained than an enrolled agent. Now, I'm something special. I'm a certified tax coach. So a certified tax coach can only be a CPA who's taken extra credentials, extra training, extra compliance in just preparing tax strategies, okay? So when you're looking at tax season, you gotta look at what you need, right? If you need something really complex. You've got businesses and real estate and all that. You want a strategist. I'm the only certified tax coach in town. There's only 6 of us in the state. Okay. If you're not looking for long-term strategy, hire a certified public accountant or an enrolled agent, because they've been tested. They've proven they know what they're doing. Don't just hire somebody who is doing taxes as a side hustle or during season only, unless you're super simple. And super simple is 1 or 2 W-2s. Really, that's it. Now, these big box stores, one last thing I'm going to talk about the big box stores. The big box stores, H&R Block, Liberty, Jackson Hewitt, those guys, they have their place. But usually the person that's doing your taxes that you're sitting across from the table isn't certified. The manager is certified, but the person who's actually doing the data entry and telling you what your refund is hasn't passed those tests. So keep that in mind as you're hiring people.
Okay.
Yeah.
So from a podcast standpoint, pretty painless?
Yeah, this is great.
Would you like to come on in the future, maybe after tax season, and kind of talk about, do an after action about some things that you learned this tax season?
Oh, yeah, I'd love to. And if you need help on how to start a small business, give me a call.
Okay.
I'd
Now,
love to
I
help.
saw online you have upcoming some seminars that you're going to do. Would you like to take a moment and talk about those?
Sure. So we're doing a webinar series right now. We just had our first one last night. It was great. It was how to prepare for tax season. The next one coming up in 2 weeks is how to audit proof your records. Meaning, you get that IRS notice and you go panic, how to be prepared. So when you get that notice, you're prepared. So we're going to talk about that in 2 weeks. And then in 2 weeks from that, which is a month from now, how to read a tax return. The tax return changed this year. The big, beautiful bill totally changed all kinds of things, added new schedules in there that people weren't expecting it. And so pretty much anybody who's doing a tax return this year is going to have a new outlook, a new form. So we're going to talk about how to read your tax return in 3 weeks. And so that's the webinar series we have right now.
Okay. Well, I will place on an end credit here a little bit of information about that so people can go and look.
Thank you.
Kim, thank you for being on the show today. We really appreciate it.
You're very welcome. It's always nice to see you.
It's nice to see you too.
All right.